and great to have everyone here today. This will be interactive, and you can feel free to pipe up and ask questions. You can do so in the chat. I'll be watching that, and we'll make sure that our speakers today hear those questions and get a chance to respond. We are being recorded, and by the way, all of our pivot sessions are on our Brink YouTube channel, which is awesome. By the way, check out chat. Vicky is working on homeschool science education and community learning. Her project is called Explore STEM, and doing really cool stuff. I know I've looked at her virus module to help my kids learn more about what are viruses. Let's get started. So we've got two speakers today. One of them is Benton Moore. Benton is one of our Brink advisors as well. He's actually got quite a cool background in clean tech as an entrepreneur turned angel investor, a climate ambassador, and a startup raconteur. He currently serves as the fund manager for the San Diego Angel Conference, which he's just done an amazing job on. I'm so just excited for what San Diego has pulled together through this Angel Conference. He also leads the tech committee for the Tech Coast Angels. And Benton's most recent clean tech startup was acquired by private equity. Joining Benton today is a guest speaker, Justin Renfro. Justin is on the fundraising team at WeFunder, an equity crowdfunding investment platform. He's responsible for finding great companies that could benefit from a capital raise on WeFunder. He's supported over 100 founders with successful raises on the platform. And I think I just heard him talking about a great little raise there with Grow Guru. Is that right, Justin?
That's correct. Yeah. We just had a good deal with Grow Guru here in San Diego. I got my cowboy hat on. I'm ready to roll.
Awesome. So prior to WeFunder, Justin had his own boat charter business in San Diego, and he also launched the Kiva.org US microlending program. So it's a pleasure to have you here, Justin, as our guest. We're very honored to hear from you. As you all know, if you've attended a pivot session before, this is really about helping provide you some value during this very challenging, interesting, exciting, wild time. Knowing that so many things are pivoting in entrepreneurship, in business, we wanted to give you just different things to think about. And so without further ado, I'm going to turn it right on over to Benton and Justin to share with you their deep expertise and insights on investing in wild times.
Thanks, Lauren. Yeah, so the universe pivoted quite a few times in the last few months when we've been planning these sessions. Thanks to Lauren for being the architect of this really awesome series. A lot's happened in 8 weeks. And thanks to Justin for being here, my swashbuckling angel pirate of crowdfunding buddy. So this will be fun. The session's called Angels and Unicorns, and that is not to be grandiose, it's meant to be ridiculous, because that's what my daughter says. When I didn't have a real job anymore and I would drop her off at school, she'd go, well, go have fun with your little angel friends hunting for unicorns or whatever it is you do, and roll her eyes, and that was that. You know, nothing like having a preteen to keep you humble. So Angels and Unicorns is where we always start these days. That's what we do and what we're after. I made the mistake of given a similar presentation in a state far, far away, and they didn't know what unicorns were, and they really thought I was just mental. So I will say, for those of you who don't know, Unicorn is a $1 billion valuation private company. It's kind of what the entire startup ecosystem is chasing. A little like Silicon Valley, a little like Shark Tank, but not really. So I'm going to tell you what's going on, kind of as an inside view in the angel world, the venture capital world, not so much private equity. And over the last couple of months, I've had some epiphanies and different perspectives. One of them is on crowdfunding, and I'm really happy that Justin can be here today, because we have a company that we both support through the Angel Conference that is making great waves with Justin and WeFunder in crowdfunding. So let's take a look. This is what we're chasing. $1 billion companies, right? These are some of the companies that have been acquired just in the last few years by 5 companies. These are 5 acquirers. You'll see companies like Fitbit and Yammer Companies worth $1 billion are very common in the public marketplace, and we're trying to find them before they get there. So what's the point of all this? The point for me is innovation investing matters. It matters a lot. This is where the solutions to the world's problems are going to come from. They're not going to come from the government or publicly traded companies who are trying to make quarterly numbers. The ecosystem has pivoted a lot in the last 3 months, and I am really encouraged by being in the trenches firsthand in the angel world and seeing companies get funded and seeing my colleagues step up and fund companies that are doing great work and really need help. As venture capital, which is, as we all know, the next step usually in a company's fundraising trek, which is spending other people's money, has really pulled back. Venture capital is not funding new companies. They're saving their capital reserves for their portfolio companies, and that's opened up a big door and an opportunity for angel investors to step up into bigger deals. And that's also created a new space alongside angels for crowdfunding. There have been some regulation changes that Justin can talk about, and there have been just a groundswell of opportunity in crowdfunding that wasn't there 6 months ago. And my mission is to actually activate more investors, be it accredited investors who become angels or non-accredited investors who become crowdfunders and become part of this ecosystem that solves the world's problems through innovation investing. So I'm going to jump into some charts. For the last couple of months, I have seen a lot of Zoom presentations. I've sat in a lot of calls and gathered a lot of charts and data, and I'm going to bludgeon you with it at rapid speed, and you can see the slides later if you want to. So I'm going to tell you why it matters to me. There are over 4 million could-be angel investors, 4 million qualified accredited investors in the US, and only 300,000 are active. So my mission is to activate those people and get them out of what I think is a really dangerous investing area of friends and family. Thinking that your next door neighbor is Zuckerberg or Elon Musk is lunacy. But if you band together with people who see deals and due diligence and pool their money, angel groups, you have an infinitely higher chance of making very, very good returns of investment. We have a lot of numbers to bear that out, but that's my spiel for this whole thing. There are $25 billion, give or take, every year invested in angel groups, in angel investments. There's double that, $50 billion in friends and family. And the failure rate of friends and family investments is much higher. So converting friends and family into actual organized, diligent angel groups is the way to go, and also into crowdfunding. So we talk a lot about angels and where they are in the journey of a company. And if you see the valley of death there at the bottom, this is why it's kind of hokey, but why angel investors are called angels comes from the old Broadway show days when no one would give directors money for their shows and patrons would actually invest and carry them across. But as you can see, friends and family and angel investors overlap, and so does crowdfunding. And that those lines are becoming more blurred, and angel investors are becoming closer to venture capital than ever before as valuations go up and angel groups do bigger deals. I'll probably skip through a little bit of this, but angels are very different than venture capitalists because their reason's not only profit. A lot of times we're interested in helping our local communities, making an impact on whatever it is that we believe in, whether it's climate, whether it's gender equity, whether it's poverty around the world or clean water. So it's usually a little bit more than just IRR. There are some great opportunities for the entrepreneurs and want to be angel investors in San Diego. You can see all of the groups here that work together really well. The Brink is part of University of San Diego, part of the SBDC. And as you grow in a company, as your company grows, you can see along the spectrum how many more opportunities there are for you. So let's see. So over the last 3 months, I think a lot of you were part of or saw the Angel Conference. We had to pivot 9 days before the conference from a big physical gathering to an all digital one. And we did it, which was cool and crazy, and we pulled it off while everyone else was postponing. But what's really, in hindsight now, 90 days out, what really excites me is the companies that needed our funds that we funded have gone on, and the 4 of them have raised $5 million in the last 90 days. So companies that are doing very important work. And also all of the 52 angels that were part of the Angel Conference committed their funds and even increased their funds the last week of the Angel Conference to help us get over $500,000. So just it's such an important snapshot into the mind of angels and how resilient. I think it's the buzzword of the year perhaps, but how resilient angels are always in the way they look at the world and a long-term view. So as we move forward, this cuts across VC and angels. The obvious money is flowing heavily into life sciences, edtech, data, fintech, and then also agtech, food logistics, sustainability. That's never been more important than the supply chain, and renewables are in favor. Obviously out of favor right now are hospitality, travel, anything in a high touch, non-essential environment. So I told you I was going to do it, and here we go. Lots of charts. So when we talk about the opportunities for angels and crowdfunding, it's good to start with venture capital because VC is usually the next step. Venture capital has been declining in San Diego already before the pandemic. So if you can see on the far right, it's gone down a little bit. It's going to continue to decline as VCs invest only in their portfolio companies and not new deals. So this was this is interesting because it's 2 surveys that were taken, one in April and one in June. You can tell that everyone had thought that the pandemic was going to be over a lot sooner in April, and now we're looking at a recovery maybe as late as beyond April 22nd, but the majority of VCs think it's going to be at least a year out. This is what we've been seeing across the board in VCs. They don't want to talk to anyone that they don't already know in the next year. They've basically taken their checkbooks and gone home. So what does this mean? We're also looking at shifting workplaces. Do we think we're going to return to offices and have startup incubators and tightly knit gatherings? I don't think so. 74% now plan to be almost always working remote, and that's something that plays in. Now, let's look at deal valuations. Over the last 10 years, angel and seed valuations, if you see the blue arrow here, have gone up a little bit from 2, 3, 4 million to about 8 million on average now. We're seeing even higher than that at TCA in San Diego. And you can see also that median deal sizes are starting to slide. So with that compression means valuations most likely are going to start dropping a little bit. We haven't seen it yet, but it's going to come. It's another snap. This is more venture capital. You can see things really ticked up the last couple of years. I think we're going to go back to more of the averages of 15 to 17 in the next couple of years. But keep in mind that those investments through VC will be mostly into their portfolio companies as follow-ons. Another chart showing exits are going to be slower this year. So that 12 to 18 months of runway is going to be super important. And here's what the VC is looking at. All of the capital crunch issues, the one I circled is just that they're going to focus on their family, keep their portfolio companies alive. I will not say new normal today, and I will not say unprecedented, and I will also not say dry powder. because I'm sure we've heard all of that enough. But if you see the chart on the right there, the money raised by VC is actually less than is going to be allocated. So that tells you that, and you can see at the bottom, the green is follow on. They're going to invest very little in new companies. So take a breather for a second. That's a lot of venture capital info to digest. I'm going to have a sip of water. This is my favorite chart today. And okay, so great. VC's out. They've taken other people's money and they've stowed it away somewhere where startups can't get it. Where does that leave us? Back to angel world. So at Tech Coast Angels, some more data we've culled. This is last year we did over $19 million in deals, about half and half follow-ons and new money. So that is a record year for TCA. We expect to continue similar investments next year. And a look at the sectors that we invested in. Very heavy on life sciences and software, Tech Coast Angels, of course. So, and then a lot of consumer internet, which is also IT, cloud services. So those are the three heavy areas, and that'll probably continue to be the similar breakdown. I think we'll probably see more clean tech and also some more fintech than we did last year. So the big question that came up when the pandemic broke is, all right, are startups now all of a sudden worth less money? Should valuations be half of what they were? And this conversation has been a debate for the last 3 months. Some people think it's more like real estate and you should look at comps. And yes, in a recession, values tumble. Others look at, well, what's a company going to be worth in 5 to 10 years? That's really what we're investing in. But what we can say is valuations have peaked at 9 million average in San Diego, California, and Southern California throughout Tech Coast Angels. And that's up from a couple of million on average. So we're doing much bigger deals, but valuations are also going up for companies that are pre-revenue. So we expect to see this tier back some, maybe not to the 4.5 million average of 16 and 17. That was a long time ago. And with just basic inflation and appreciation, it's natural to be up. But I think the valuations we start to see will be more in the 5 to 7 range instead of the 9 to 10 range. So keep that in mind if you're an entrepreneur or an investor. That's what the data is suggesting. So moving to a national organization, this is the Angel Capital Association's recent polling. And we looked at all of the portfolio companies, all the member companies throughout ACA, and found out what they've been doing in the pandemic. And you can see almost everyone applied for CARES Act funding, and entrepreneurs moved quickly, let go of employees. 60% almost laid off staff, and 88% are trying to grow their business. So very few businesses went under. They are able to take advantage of the CARES Act and the PPP and EIDL loans, which is great. At the Brink and the SBDC, it's over $10 million that has been facilitated for companies who need it badly. So it's a great program. The program for PPP actually ends today. So we're anticipating another one that's going to roll out soon, but the first round is done. Many trillions dumped into keeping small business alive. And here's another snapshot of the same data. Have you seen change in valuations? Notice that 0% see valuations going up, half and half, down and same. And here's some encouraging stuff. We all know valuations are going down. Great, it's tough to do business, but angels are committed. Angel groups don't see any decline in people pulling out. We see a good sign that most investors continue to invest. And great news is they don't see that COVID-19 is a real threat to their angel groups. What is a little bit concerning is angels to a person will be investing slightly less. Now it's, down 1 to 2%. It seems to be the highest number, so it's not anything too worrisome, but it's likely to be a little bit smaller funds next year. So jump over this. I'm going to let Justin talk about what he's been working on with Grow Guru, who was one of the SDAC. They were the SDAC People's Choice Award winner this year, and I think that number's actually been changed. It's much higher. So back to the point. Innovation investing matters. Angels are now stepping into VC land. Crowdfunding is accelerated. I think $140 million or something that WeFunder has pushed out. And my mission is to activate more investors, be it accredited or non-accredited. And keep in mind, one of my favorite sayings, especially for you, Justin, with your haircut, future is unwritten. So with that, hopefully we have plenty of time for Q&A and Justin to tell us about WeFunder. And let's do a little bit of trivia time. All right, so first one to answer gets a prize.
All right, so if you could respond in your chat, in the chat there, how much do friends and families invest a year? And the first person to get this correct gets a Benton's coffee mug right off his desk.
Or a clean one, if we can ever meet in person.
Maybe we'll clean it first.
Yeah, says USD.
Right.
That's not individually, that's
In total.
on aggregate in the year. All right, Jerry Ann, you win. Nice one.
Well,
No?
Bill or Mel?
Bill.
Very good. All right. Thanks, Jerry.
All right. Let's do another. How much did San Diego Angel Conference winners raise during the pandemic in the last 3 months?
This was on a slide, so if you're paying attention, you'll get this one. I think Ruth got it.
Ruth got it. Nice work, Ruth. All right, one more trivia. How much CARES Act funding did the SBDC facilitate? I don't think this was written down. I just mentioned it.
Yep, Maya got it.
Boom, nice.
Yep, and Ruth. Ruth, good job. Cool.
All right,
All
our
right.
winners are
Glad y'all
Jerry,
are
Ruth,
awake.
and Mia. Good stuff. All right. So Justin, you have been busy the last week working with Grow Guru.
True.
We want to hear some stuff.
Yeah, totally. So first off, kudos to the entire Brink team for putting this together. It's just the programming is so high quality. It's been, I've been involved with you guys since November last year, and it's just a wealth of information. Every single time I come, I get a lot out of it. So kudos to you and Misty and the whole team for putting this stuff together. I met Grow Guru during the San Diego Angel Conference. I was on their due diligence team, and we took a pretty deep dive into the business and understood the model, where the company was at. And I felt really compelled by the story, the vision for the company, the momentum and traction that they had established. And I just saw a lot of opportunity there. And when we started talking about WeFunder, anytime I go into a new conversation about is WeFunder a good fit and does this make sense, it's really a conversation around the different assets that the business had. And I think what was really compelling for Grow Guru is, Patrick and Farouk and his team have been out kind of, screaming about this for years. they've built a very strong network, both in terms of their ag tech community, but also, broadly within San Diego in the startup ecosystem here locally. For them, I think the main appeal was, we put a ton of time and effort into building this social capital and building this, reputation as a strong kind of contributor in the ag tech space, in the San Diego space. And WeFunder was really an opportunity for them to activate that audience. The beauty of a crowdfunding platform is, there's no minimum, the minimum check isn't $25,000. You can set your minimum to $100. So anybody can go invest $100 in Grow Guru. And for most companies, that really kind of opens the floodgates. You can cast a really wide net, and there's a massive kind of pool of people in that extended community that can come in and support you. And as we started to kind of dive into those dynamics and better understand, is there an appetite for this? And is there a pathway to bring in that large network and that large community to invest in what you're doing? The answer was overwhelmingly yes. So we decided to move forward. We built a really nice profile. We connected him to a few different partners within WeFunder's networks. And through a few different efforts, we were able to, we're now at 1.2 million raised. We launched just under 2 weeks ago. So the momentum and the appeal and the appetite for what they're doing and the impact that they're looking to make is certainly there. And I think that the benefit of doing it in this type of way is it really is an impressions and exposure engine where you're getting kind of cast out to a massive audience on any of these crowdfunding platforms, whether it's WeFunder or Start Engine Republic. We have these huge pools of investors. So for them to be able to kind of like activate their networks and then have the network from WeFunder accelerate the momentum, we just saw, just hitting these funding benchmarks at a rapid pace. So it's certainly not the case across the board where a company launches and 2 weeks later they have $1 million. There was a lot of work and preparation, and it's been publicly visible for less than a week, but we've been working on it since the Angel Conference and making sure that all the pieces were in place to have a successful campaign. But I think that that the appetite and the engagement and the exposure within his own network, really catalyzed and activated the momentum and interest and appetite from WeFunder's network.
Cool. Yeah. So it strikes me that, well, first of all, can you raise $1 million for any company in a week? Is that the deal?
For the right company, for sure.
Okay.
Yeah.
Good. Yeah, so it strikes me that one of the benefits of crowdfunding that doesn't exist in other ways of raising funds, whether it's VC or angels, is you get such a broad network of investors. It's also a marketing campaign. It can be an introduction to customers you wouldn't normally get scattered around the country. So it seems to carry some intrinsic value that's maybe not there in other groups. How do you see that?
Yeah, so again, it's just an impressions game. You have a ton of random eyeballs coming to your campaign page. You never know, kind of that right person comes in. It's someone completely out of your radar that's interested in writing a $50,000 check. I'm hearing from founders all the time where family offices are using WeFunder as a source of deal flow, and they're kind of harvesting those conversations off platform and writing really big checks down the line. So I think the exposure is really the key there. There's a cool company raising right now called Payroll for Free. They're just a payroll service for really small companies. And they've raised $200,000 purely from their own customer base. So I think it's a cool dynamic that you can convert customers into investors and new investors into customers. So it definitely works on both ends of the spectrum, especially for consumer facing brands or brands that have a strong kind of connection to their target user. I think that there's a lot of assets there in terms of, how do you activate this community and create a deeper engagement? If you can turn your customers into investors, they now have a vested interest in you being successful. So they're going to be more likely to evangelize and more likely to double down and more likely to really dig their heels in and maximize the value for the business. So I think that there's tremendous value in converting customers into investors, and your own network into investors.
Hey, Justin, we got a couple of really great questions in the chat for you. First
Sure.
one, in terms of relevance, I want to ask Jerry's question first. Jerry asked, does WeFunder have a segmentation or other statistics about their investors?
Yeah, Jerry, good to see you again. We had a good talk a couple weeks ago. I hope you're well. Yeah, so I would say, so the average investment, I'll just throw out a few kind of generic numbers about the platform, our platform specifically. The average campaign raises $350K. The average investment is $1,000. And the average amount raised is about 50% from WeFunder and 50% from the founder. So that's a general baseline. In terms of our investor pool specifically, we have about 100,000 active investors. The way we active means that they've made multiple investments over a 12-month rolling period. And about 20% of that pool are accredited investors. But I think the real appeal from my standpoint is that anybody can invest. We're trying to even the playing field, and it really is like get as many family and friends into that kind of like more structured foundation where they can, kind of contribute to these angel ecosystems around the country. I think we're adding a lot of value in that respect. But no, you're seeing more unaccredited investors than accredited investors by a 4-to-1 split.
Thanks, Justin. And I'll flip to Kyle's question. Kyle Kimmel asks you, what does this type of crowdfunding cost to small business in terms of equity or upfront investment?
It's a great question. I would say, so we take a flat 7.5% off of the top. We do not take any equity. For any company that's referred to us from the Brink, we've lowered it to 6.5%. So we have a 6.5% take, and that's cash off of whatever's raised on the WeFunder platform, with the exception of we will not take a take on any 25K investments that the founder generates. So a lot of times founders will come with 200,000 in big checks. We won't take a take on that pool of capital. That's the only cost to launch. You do need reviewed financials if you are going to raise over 250K. That's generally a couple thousand, but that's paid to an independent CPA. And I would say most campaigns that are in that 300K plus category are spending between 5 to 10% of their raise on marketing. So we have a number of marketing partners that optimize for retargeting and paid media to really generate eyeballs and exposure to kind of focused investment groups. So those are all different, that's an optional cost, obviously, but I think our better campaigns, invest in that area.
Got it. Thanks, Justin. Couple questions that I think are more of Benton's area. So Benton, Reza Shirkat asked you a couple things. One is from a TCA perspective, he's got a remote patient monitoring solution, and he's wondering if he should be working with TCA up in Orange County or here in San Diego. So maybe let's take that one first.
Either or. Orange County has a lot of med tech going, and we have a lot of biotech med tech in San Diego as well. I'll say this about TCA. We also share the same deal platform, so we all have access to the same info. And I will say that the San Diego fund is closed for the moment. We're fully deployed. Individuals are investing, but the new fund opens in September. Orange County's fund is further behind, and they're still deploying new capital. So you may want to start in Orange County. And then usually if the fund invests, other individuals throughout the network, LA and San Diego, do invest also. But they're both good for fit for that sort of company.
Great, Benton. Thanks for the detail there. And Riz's other question is more of how do VCs and how do angels feel about crowdfunding? And that might be something you both want to take a stab at.
Can I jump in real quick?
Go for it, Justin.
Yes, you first.
So prior to March, every single investor that came in through an equity crowd fund went on the cap table. So with an average raise of 350K and an average number of investors of 350, that was a very unattractive aspect for most angels and VCs to have 350 people on your cap table from an equity crowd fund. In March, we rolled out a new solution that puts all investors into, we pool all the investments and they're voted on behalf of the lead investor that the founder chooses. We feel that that's a game changer for founders, and that's really going to shift the tides in terms of the attractiveness of equity crowdfunding. So that, again, we're working on that. That got rolled out 3 weeks ago, and it's very, very early, but I think it really points to equity crowdfunding being more and more attractive. The SEC also currently has a $1.07 million limit for Reg CF equity crowdfunding raises. We expect that by the end of the year, that limit's going to go from 1 to 5 million. So that's another kind of really attractive aspect as we look at, the overall landscape and kind of how equity crowdfunding appeals, to that angel and VC group. Definitely not there yet, but I think that we're trending in the right direction from my perspective.
And I asked Benton if I could jump in real quickly here and provide a little perspective on this one too.
And I said yes.
Yes, thank you, Benton, I appreciate that. Traditionally, crowdfunding has been seen by investors as debt, because most of the time crowdfunding was a pre-sale of something and then they didn't raise enough through that pre-sale of the item to actually deliver on it, which means then they needed to go raise more money to completely fulfill the crowdfunding, and this clears all of that up. So this isn't, you're not doing a pre-sale or pre-purchase of a good. This is something different. So the change in the rules, single line on the cap table, and the move away from restructure of debt ends up being really, really great move. Crowdfunding, I think we're going to see it increase dramatically in a bunch of ways in the next short while.
And I got my cowboy hat on and I'm ready for the ride.
Stay
Well,
positive,
and let me
Justin.
just say too, like I think we've talked a long time about crowdfunding being the tool that levels the playing field for diverse founders, for people who can't raise friends and family around any other way, or for a bunch of different reasons. We're almost there. This set of rule changes gets us to the place we've been hoping we'd get to for the last 4 or 5 years. So super excited to see this one come together.
Yeah, it's absolutely a game changer, and angel groups and especially VC have definitely looked down on companies that have done crowdfunding and have 75 to hundreds of people on the cap table, and because they're investing in companies that have to then pay for that accounting, all of that administration work, which is onerous, and we try and invest in companies that are very frugal. So this is a game changer from the financial perspective. And then what I also see is you have very diverse investors at all different levels, and that's great marketing. That's great branding, great spread, and reach for your product or service that you wouldn't get from just having, say, 1 or 2 or 3 investors that were all institutions.
Justin, I want to make sure we get to a couple questions that you got related to WeFunder and kind of who's on it. So I think I'll ask Christian's first. Christian asked about a percentage of healthcare companies that are on WeFunder. So let's ask that first. Yeah,
I would also like to just loop in that other question about B2C versus B2B.
Yeah, that was the other one I was going to ask. Yep.
I think they kind of go hand in hand.
Good.
Ultimately, I think that if it's a good investment opportunity, it'll catch wind on WeFunder if you have the right founder, the right strategy, and the right dynamics. You see the same common kind of issues with founders who are way too bullish on where they set their valuations, that aren't putting any energy or effort into the presentation or the proactive marketing, that expect it to just, I'm going to post my profile and watch the investors flow in. So I think that the common thread is it's a good business, it's a good investment opportunity. The founder is kind of, engaged in making it work, and they've got the right partners in place where, maybe marketing isn't your expertise. You bring on a marketing partner to help you. I don't see a huge difference, and it's like this type of company generally performs really well in comparison to this type of company. Let's say there's nuanced stuff where it's like movies generally don't do that well on WeFunder, but I think that in the kind of scope of traditional angel investor opportunities where they're out pitching the TCA and they're in that category, I would say their performance is generally very good if you have the right pieces in place. Now, specifically to the B2C versus B2B, I think B2C companies have a really attractive asset in that generally a B2C company has tons of customers. So being able to engage and activate and create, conversations with a huge, broad audience is certainly an asset in the context of equity crowdfunding. Generally for a B2C company, you're going to see a lower average investment from a larger number of people. For a B2B company, you might see a smaller number of investors, but a higher average ticket. So it all evens out from my perspective in, whether it's health, whatever the opportunity, if they're in that angel realm and they have the right pieces in place, I genuinely feel that they can be successful. I hope that answers the question.
Yeah, thanks, Justin. We've got a lot of folks asking us great questions on here, so thank you all for doing that, and keep doing so. We've got time to answer your questions. Also, if you feel like asking it, as you feel like you want to actually engage in some conversation, feel free to raise your hand and I'll call on you so we can actually have real dialogue, not just chat dialogue. So let's see. All right. We do have another question in here from Bobby. Do you want to ask it?
Hi, okay. Can you hear me?
Yeah.
So the question is, what I see a potential picture developing here, which is the angel investors, have traditionally done, we'll call it the heavy lifting, which is the due diligence. And I'm new to the, let's call it the formal angel investor process, but there was a lot of heavy lifting, a lot of hours and people spent, which was well worth it. I mean, it was, for those that do it, I think we enjoy it. But with your method of raising money, what's the angel investor's role? How do we integrate the two processes now? I mean, where do we see that going? Because, now I'm only seeing the snapshot of our relationship right now. We get a little preferred rate for investment, or they get a preferred rate, the company. And, we're going to, next round, we'll be trying to raise money. And is there something that says, we're going to use your tool, perhaps, and, as the way to raise that $1 million for our next round? And instead of having, 3 companies, we could have 20 companies that raise money. And so I'm just wondering how other people on this call see this and what we can do to move it forward. And one other question. I am concerned, I was just about to type it, maybe tied to this, is I'm concerned about the sort of fool's gold process here. As you expand, you have both accredited and unaccredited investors. The accredited investors sometimes invest in fool's gold too. I can speak for myself for doing that. But the unaccredited investors, it could get even worse. You could have tens or hundreds of thousands of people doing it. And I am concerned that there'll be sort of a feedback maybe a year from now or 2 years, that these guys are looking at their investment portfolios of potentially aggregately thousands of dollars. And it's kind of like having, paying 26% on your credit card. It just doesn't look very good after a while. So if you could answer those two questions, it'd be great. And I don't, it's open to everybody, I guess.
I'm happy to jump in there. So from our perspective, for WeFunder specifically, we're really orienting around strategic partnerships and finding, building relationships with organizations that are doing that due diligence and finding a way to kind of cycle that through WeFunder. So a very practical example, given that this is a Brink, a Brink hosted, and we all had visibility into the angel conference. It's like, well, and this isn't specific to WeFunder. It could be any equity crowdfunding platform. I really speak for the equity crowdfunding industry more so than WeFunder, honestly. Where it's just like, hey, the angel conference has picked 3 winners. We're going to make 3 investments. We're going to cycle those onto WeFunder, and then let the overall kind of conference, get in on this deal, and then it's going to go to WeFunder's audience and get in on this deal. So there's multiple kind of levels by which an angel group can use WeFunder, not just to cycle the investments that they want to make, but also use it as a broadcasting opportunity to their extended audience. And we're starting to see that with multiple different groups around the country. And I think that as we start to formalize what that looks like practically, there's going to be a huge opportunity there. And for us, it's a huge win because we want to partner with angel groups that are doing that due diligence. In full transparency, they're going deeper on, the dynamics and the nuance of the company than we would be at WeFunder. In terms of the Fool's Gold comment, I think that Fool's Gold is relevant and applicable across all levels of angel investing. And that's just kind of how it goes. It's a herd. We're creatures of the herd in a lot of respects. And I think that that's applied here. It's on the investor to do their due diligence, and WeFunder is trying to make sure that we extend that opportunity for investors to ask questions and engage with the business in as deep a way as possible. I don't know if you guys would have anything to build on that.
And Jerry, I see you raising your hands. Feel free to go off mute and if you want to make a comment, Jerry.
Yeah, so Justin, thank you for the comment. That was really good. I think playing off of, and thank you for the hello, and you look great in the hat. A great hat, by the way. So playing off of what Bobby was just saying, if we look forward in terms of angel funding and crowdfunding as a whole, and linked in with the pandemic that forced everyone to be virtual, it occurred to me at some point, most angels I've seen, or most angel groups I've talked to, have a very strong regional focus. New York Angels, the Bay Area Angels, Alaska Angels, San Diego. So it's very regional focus, but there's no reason for that, right? Especially with crowdfunding as part of that. So, and my own network goes out to New York and Chicago and Florida, and I've got folks from all over the place that I'm talking to. So the question I have then is, and it's a question posed, I guess, for both you, Justin, as well as to Benton and anyone else, of course, where do we see, let's say the next 3 to 6 to 12 months, where do we see angel funding as a whole, where there's really, it's been regionally focused traditionally, but we're all about breaking tradition. So why wouldn't TCA, Tech Coast Angels, Southern California, get something from New York or Florida or wherever? Do we see that happening, or do you think that's not going to happen? Question for both.
Well, good question, Jerry, as always. And yeah, it's already happening actually. So there's a thing called the ASN, which is the Angel Syndication Network, which is a monthly deal flow meeting between all of the angel groups in America. And we all share deal flow. So we look at what's in Texas and New York and Boston, and they look at everything here. So it's not as intense as the number of deals we see regionally. And there have been some studies on angel groups in general geographically and performance. And it turns out that actually investing in your local community delivers better returns. And whether that's because you understand the mentality of the company, the locality, or if you're just more involved in that company because of geographical proximity. There have been several studies done, and the one at TCA was pretty stark as far as local companies performing better. Now, if you're in a different area where you don't have strong deal flow, if you're in a small town in Arkansas and you and 6 buddies form an angel network, you may not have the same results if you have the opportunity to invest in Boston, Austin, San Diego, in the Bay Area as Tuscaloosa. But what we've seen is in the major markets, you do get better returns, but sometimes you miss out on some of the best deals in the country, and that's why this whole network was created. But I agree completely with you. What we've seen over the last 3 months through SDAC and TCA and ACA is angels are more engaged now than ever. And maybe it's because they're not wasting any time on commuting. They don't like doing homeschool and they're hiding in their offices. But the meetings we have, highest attendance ever, the deals are getting done faster. Everything's happening. And we saw this with the Angel Conference. We ended up having participants from all over the country and internationally. Over 700 people tuned in with very little notice. So I think you're onto something, and it ties into what Justin's been doing with WeFunder. There's a great convergence, I think, to all digital platforms. That's not going to go away, and that's not just in investing. That's also in ed tech and work from home. So those are trends that we're very much in tune with, and I think Justin's tapped into it, and Guru is a showcase of how it can be done right.
Thanks, Benton. And let's you and I talk. I've got some thoughts on that as well. So thank you.
I'll reach out.
Yeah.
I think you saw, you're seeing a lot of trends with COVID that are playing into these dynamics in a very direct way. Just if you look at the Angel Conference itself and how much more exposure it was able to get as a result of being remote. That's a very kind of practical example of the benefits of being in a virtual space. So I see, these trends, really helping to bridge these different communities. And, when I talk about these strategic partnerships that we're oriented to build at WeFunder, it's really about those different angel groups around the country, bringing them in and facilitating cross collaboration, where it's like, hey, if you have a deal and you promote it and put your stamp on it, and there's follow-on investors that come in, they know where to go. And we're starting to see that in practice. It's very cool.
Thanks,
move
Justin.
on. Yeah. Thanks, Jerry. Great questions. Great dialogue here. We've got a few minutes left. I want to make sure we get to Ruth's question. So Ruth has a business. She's an entrepreneur who, right before the pandemic, had a patent issued and a trademark as well. She even got a PO from another company, and she's wondering how can she, and I think this, I want to ask it in a broader sense, because I think there's a lot of entrepreneurs on the call who, had this kind of traction, but then pandemic, and now they're looking at the investment community saying, now how do I get funded? What's the best way for me to even think through the options I have? So I know, Misty, you're familiar with Ruth's company. Not sure, Benton, if you're familiar with Ruth's company, but I think in general, is there any kind of general advice you'd want to give to someone who's saying, what options and what should I consider in looking at these different options?
Well, one of the first things we look for in investing in a company is, does anyone want to buy what you're selling? And if you have a purchase order from a known company and you need capital, and you have IP and you need capital to fulfill that order, that's a very good starting point. So your deck can be short. And if you have an investor deck, send it around and be very clear about what the ask is for. And I tell all of my clients these days, that you need to make sure that whatever you ask for in a funding round these days needs to last you for 18 to 24 months, and expect no other funding to come in. So yeah, be very clear on what you're looking for, and if you want to send over the deck, and I'll be glad to have a look. But yeah, it sounds like from what you say, you're in a good position, and those are the companies that are getting funded, not companies that are 2-3 years to reach an MVP, but you're ready to go. You just need money to facilitate your orders, right? Ruth, you there?
She gave you a thumbs up. There we go.
Okay.
Sorry. Okay, yes. So how do I reach out to you?
Sure. Yeah, you can reach out to me, and I'll be happy to take a look and give you my thoughts.
Thank you, Benton.
Yeah, my pleasure, Ruth. Good to see you.
Good to see you too.
All right. Any other questions from folks? I'm looking for hand raises.
All right, so I do need to do one disclaimer, a bit of housekeeping. So nothing in this program, since it's going to be in our permanent record on YouTube, nothing in this is legal advice. I don't play an attorney on TV or YouTube. None of this is business or financial advice. This is just an information session. And most importantly, the Brink is not recommending any service providers, though Justin Renfro is a member of the Syndication Conference and my colleague there. And we do share deals, but this is not an endorsement in any way, shape, or form, other than being really good information.
Yeah, and we certainly want to thank you, Justin, for spending time with us today and answering. Many folks have questions about WeFunder and obviously and crowdsourcing and crowdfunding in general. So thank you for answering all these great questions. We appreciate everybody's time today. I did just get asked, okay, is there another one of these pivot sessions? Every Tuesday at 10, just tune on in. We are going to be having another guest speaker. I'm really excited. It's someone who is really life sciences focused, because I know from popular demand, a lot of you are in the life sciences space doing some really great stuff with both kind of medical, biotech. So Earl Hager is going to be coming in and speaking to us next week and talking a lot about grants and SBIR, kind of the process around SBIR, and a lot of details around that, as well as university tech and how to get involved with getting assistance from universities. So it's certainly a worthwhile presentation for all of you life science gurus out there who want to join in. And we'll be filling the July calendar with a lot of other talks. I know a lot of you are a little overwhelmed these days with time management and just making sense of what you need to accomplish. So we'll be doing a session, I think that'll be an upcoming one too, around different techniques to use around time management. Any other last minute comments, questions?
I would like to say thank you for having me. I had a blast. Always fun to ride with my homie Benton, Misty, Bobby, the homies. My email's justin@wefunder.com. Whether it's specific to WeFunder or equity crowdfunding, and is this the right option? What are the nuances? What do I need to have to be successful? I'm more than happy to be a reference point and to just educate anybody who wants to learn more about it. So please don't hesitate to reach out. Yeah, thank you again for having me.
Thanks a million, Justin. Appreciate you being here. And yeah, if anyone wants to reach out to me, I'm Benton Moore at sandiego.edu. Please reach out. Justin,
you,
see you on the boat sometime soon, I hope.
All right, take care, everybody. Have a great,
Thanks, Lauren.
great
Thanks,
week.
everyone.
Happy 4th of July, everybody. Take care.
Stay safe. Stay connected. See ya.